Hello students. In this session of 21 of company final accounts, we will be discussing about vertical format of balance sheet, asset items in particular. In the previous session, as you all saw, we discussed about the items which have to be shown under equity and liabilities head. And in this session, we will be discussing about the items which have to be shown under the head assets. So as you can see in this format, there are two subheadings under assets, one being non-current assets and the second being current assets. So under non-current assets, as you can see, there are five items. And these five items are fixed assets, non-current investments, deferred tax assets, long-term loans and advances, other non-current assets. Under current assets, we have inventories, trade receivables, cash and bank balance, and short-term loans and advances. So now let us have a look under for fixed assets. So in fixed assets, we have tangible assets and intangible assets. Like you all know, land, building, plant and machinery, furniture and fixture, vehicle, etc. come under tangible assets. Under intangible assets, we will be having items like goodwill, brand, trademark, computer software and mining rights, and masthead and publishing title. Hello students. So under current assets, we have current investments, that is investment in equity instrument shares, preference shares, say, government securities, mutual funds, debentures, which are held for shorter duration of time, that is which is meant for resale. So under inventories, we have items such as finished goods, work in progress, stock in trade, stores and spares, raw materials, and loose tools. So trade receivables, here we have bills receivables and debtors. And like you all know, cash and cash equivalent comprises about the items like balance with the bank, check overdrafts, draft on hand, cash in hand, and deposit with the banks. So under short term loans and advances, we will be having items like short term loans and advances given to the employees. And under other current assets, it is restricted to prepaid expenses, accrued incomes, interest accrued on investment, advance tax, etc. These are the items which come under the asset side of the balance sheet in the vertical format of the company's final accounts. So there is another head, that is contingent liabilities and capital commitments. These need not be evaluated. However, now let us have a look as to what these are. Contingent liability, those liabilities which may or may not arise because they are dependent on a happening in future. It is not recorded in the books of accounts but is disclosed in the notes to accounts for the information of the users. Now, what is capital commitments? It's a future liability for a capital expenditure in respect of which contracts have been made. That is, these are the uncalled liability on shares and other investments partly paid. Now, this is how it appears under the non-current head of the assets side of the balance sheet.